My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I'll be one of my friends just trying to make some money. My job is not just to entertain, but to teach and educate you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The Doomsters, well, guess what? They lost again. They forget this is a market that wants to be bought badly. Buy! Especially when you get a sudden dip or the averages are oversold as they were. That's essentially what happened here with the Dow rebounding 237 points, the S&P jumping 1.32%, NASDAQ pole vaulting 1.88%, pretty much way back to where it was before Friday's sell-off. Now, granted, the Dow and the S&P didn't go all the way back, and it's almost inconceivable that a country as large as ours doesn't already have someone walking around with the Omicron variant, the one that looks to be more infectious, not necessarily dangerous, but infectious than Delta, although it may not be more deadly. I think there could be some more selling when we get a new victim in this country. And that's because our markets have a bad history of reacting poorly anytime someone gets hospitalized with a new variant in this country. So our optimism is obscured. We convince ourselves that we're invulnerable, then something reminds us that we're not, and stocks temporarily get slammed. Remember when the previous administration repeatedly told us that things were under control and COVID was contained, and then it wasn't, and then bingo. The good news for the bulls is that now we know better. The bad news is that a lot of people seem to assume that we can go right back to normal because Omicron might not be as bad as we thought when stocks were selling off last Friday. I think it's somewhere in between. I wish I could say the same, but not a single authority I know is actually making that more bullish argument. The only analyst I saw who was willing to go there for a moment is John Hatzius from Goldman Sachs, a very fine analyst who laid out 4 scenarios, 2 of which were positive, 1 of which was uber positive. So what is the right way to approach the Omicron strain? I'm glad you came to me, because I think what I want to do is go clinical. What I've learned to do through this whole scenario is rely on science. And that means relying on Pfizer, which, by the way, stock was down today, seemed attractive to me, and Moderna. Now, we heard from Dr. Albert Bourla, CEO of Pfizer, and Stéphane Bancel, CEO of Moderna, this morning on Squawk. I found myself thinking, I sure hope these 2 people win Time Magazine's Person of the Year, because they're amazing. Bourla reassured me that Pfizer not only has something in the works for Omicron, they also got some antiviral that you can take when you get sick, and if they can pump that thing out by the tens of millions, which I think they can, well, then we're going to be a lot less fearful, a lot more buoyant. As for Bancel, he plans to be the first out of the gate with the vaccine for this strain, just like he was the first out of the gate in 2020, when everyone was dumping stocks left and right. I trust these 2 gentlemen as much as I distrust the people running the World Health Organization, the CDC, the FDA, and the NIH, a veritable alphabet soup of experts who seem like they're actually in way over their heads. When I say trust the science, that doesn't really mean buy the science. I mean, it doesn't mean buy the stock market, but it most certainly means do not panic. Once again, do not panic. They know nothing. Those who panicked and sold in the maelstrom that was Friday, well, already they got a kick me sign on their forehead, on their back, wherever it is, because, man, they regret it. I think we heard one loud shoe drop Friday, and we're still waiting for a softer shoe. That's what will fall when the CDC recognizes probably, some mythological plane came here from South Africa 6 or 8 days ago with a bunch of people who likely have the Omicron variant, and it's now spreading, not unlike what happened in the Netherlands. When we no doubt get hit with a CDC-inspired dip, that's when trusting the science will really come in, because it will give you the confidence to buy stocks a second time into weakness. Now, if you stick around, I've got 2 shopping lists. One list if you think we're going back to business as usual. That's the so-called buyable dip that we already had. And another list for those who are worried about a slowdown, and that means a buyable dip that's about to happen. Before I get into what you should buy, though, you need to understand one of my cardinal rules, why nobody ever does make a dime panic, and what really occurs. What's the schematic that makes it so it's always right? Well, reason number 1 is good things can still happen, something people always overlook, although that's hard for anyone to acknowledge into the teeth of the selling. The drug companies are using very sophisticated methods these days that allow them to blast out new vaccines and new treatments at an unbelievable blistering pace. Artificial intelligence has rapidly accelerated the vaccine development process. It takes days what used to take months or even years to do. Yet the sellers on Friday acted like this new variant somehow had Pfizer and Moderna totally on the ropes, just stumped, even as they hadn't even said anything yet. I mean, that's fear pulling the trigger, not rationality. Second, the governments around the world had to act decisively because most of them were viewed as too slow the first time. However, that didn't mean we get the dreaded lockdown here, even as that was on every seller's breath. My advice: get some Listerine. Sure, we'll have more mask mandates, and they'll only be obeyed by people who are already vaccinated. I know. Maybe we'll bring back some social distancing, but if it gets bad enough, an actual lockdown, not in the cards. Please know that, not in the cards. That means we'll likely have a robust market, but it's not the kind of thing that should trigger, a huge decline, especially given how oversold stocks were coming in. Hence, no panic. No, don't panic. And I don't know how many times I can say it. If I don't, there's a lot of things that I have to just address in the investment club. And this is a key tenet, as I put out when I did several bulletins on Friday, telling you not to panic. I'm glad I did that. Third reason not to panic, today's action. Now, we have seen repeated comeback rallies, some which last only to the morning. Others that lasted all day, gave you ample prices that were higher than what you got on any day one of the sell-off like today. Some of that's just by the dip philosophy at work. But a lot of it comes from pattern recognition, that the market overshot on Friday because trading was too thin, couldn't handle all the selling. Hey, speaking of thin, let me give you the best example, and that's West Texas crude. It was around $80 a week ago. Our president led a coordinated round of strategic petroleum reserve sales to tamp down the price. No dice. Didn't work at all. Bulls that lapped it up, stocks went higher. But one day of the Omicron variant took oil down to 68. Member of the U.S. government, go buy back that strategic reserve oil. It's a good short. Might not go lower. Somehow, despite the repeated irrationality of oil, remember when it traded at negative prices last year? What was that? If crude gets clubbed, then the market still goes down with it. The idea is that oil is a good barometer for the broader economy. But that's only true in general terms. On a day-to-day basis, oil's more of a barometer measuring how long or short the futures traders are, which is almost entirely divorced from how much oil we're pumping out of the ground, and more importantly, the demand side, how much we're using. I say forget oil prices as a tell. The oil stocks are the real tells, and they barely got hit at all. Final reason I don't want you to panic, final reason why panic doesn't work as a method of investing, there's no systemic risk. Look, there are rare moments, like in 2008, when the fate of the republic, or at least the Western financial system, was held in the balance, and the politicians seemed totally clueless. There was a real threat to the banking system, one that might have laid waste to the bond market and to your paycheck, possibly taking out the whole financial industry, including your ATM, if then Fed Chief Ben Bernanke hadn't done exactly what Jay Powell did early last year. He said we aren't going to let any big institutions fail. If Bernanke had simply said that a few months earlier, we probably could have avoided a lot of pain and heartache, but he thought it was like overstepping his bounds. This time, thankfully, we got a Fed chief who's not asleep at the wheel, who's much more creative. We won't let this new variant knock things off kilter. Not that President Biden would allow that to happen either, although only one of these guys seems completely in charge and unfazed by events, and it's not the guy in the Oval Office. That said, kudos to Biden for working on the supply chain. Makes my job easier. I'm sick of talking about it. Bottom line, the last two sessions were yet another demonstration that panic is not a strategy for you. It's not a strategy at all. Am I worried about the Omicron variant? Sure, I'm not an idiot. But we've seen this movie before, and we know how it ends. Let's go to Bill in New Jersey, please. Bill.
Yes, Jim. My question is, what will GE offer current shareholders when it becomes three independent companies?
Oh, boy. I'll tell you, Bill, a lot of people now do not like this breakup. I think that's wrong. I think people didn't like the combination either. What you need to see is you need airlines to do well, and that's not going to happen with Omicron. You need to see the power business doing better, and I don't know what's going to take to get that better. And you need to see healthcare doing well, and I want a piece of healthcare. I would buy that particular aspect of the company immediately. So what you have is you got 3 plus 3 equals, you got 1 plus 1 plus 1 equals 3. And I think that people felt 1 plus 1 plus 1 is equal to 4, and that didn't happen. I'd hold on to GE here. I think Larry Culp's doing a good job. Let's go to CEO. Let's go to Dominic in New York. Dominic.
Hey, Jim. Booyah.
Booyah.
Happy holidays, and thanks for all your help.
Right back at you. What's going on?
With the holiday season rapidly approaching, what are your thoughts with FedEx?
All right, now today there was a nasty downgrade of a stock I like very much, which is UPS. Why do I say it was nasty? Because right here we had Carol Tomei on, well, of course it was via Zoom, and she was saying, listen, we're not going to miss for Christmas. Yet some guy still felt heartless enough to take Grinch to her. I'm not a Grinchitis. I don't have that disease. I think UPS and FedEx should do well. By the way, I think Fred Smith is good. He certainly, got the edge of, his son is the coach of the Falcons. I had Patterson going yesterday. I love the Falcons. Anyway, look at the Doomsters lost again, okay? Just more proof that panic always fails. You must believe in that concept, even if you don't believe in what I'm saying here. Panic, not a strategy. On Mad Money tonight, the Omicron variant wreaked havoc on the markets at the end of last week. So, I mean, do you want to brace for a slowdown or not? I'm going to reveal a list of stocks that are worth buying if you think so. Then on the other side of the coin, I'm giving you some names to watch that could benefit from the quick snapback that already started today. And amid Cyber Monday, can we please go to the biggest proponent of digitizing small business? Find out whether Black Friday was as bad as they think. I bet you it wasn't. Don't miss my exclusive with Shopify. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.